January non-farm payrolls increased by 243,000 jobs. The unemployment rate, 8.3%. Average hourly earnings increase 0.2%. That's the biggest increase in employment since February 2009.
Folks, welcome to the Contrarian Trader. And yes, it was a great jobs report, no doubt about it. Barack Obama is probably skipping across the White House lawn right now. It was a good report. It bodes well for him in the short term anyway. Longer term, it's a question mark because we need to still create, just to get below 8% on the unemployment rate, 243,000 new jobs per month. And remember that report, the release yesterday, was matched back in 2009. It took over a year to get back to the 2009 highs. So yes, it was good, but we need to see it consistently, and we haven't been able to see that. Before we get deeper into this, let's go on to the remarks from Andrew Ross Sorkin.
I wanted to go with this. There's a Hamilton Place Strategies white paper out that says that if the missing people in the labor force, the unemployment rate would be, if they were actually in, the unemployment rate would be 10.4%.
Andrew,
do you buy that?
Where have you been? Perhaps you should have been watching the Contrarian Trader, because I have been saying this for months. For months now. Where have you been? Granted, your number 10.4%, by the way, that was released before the jobs numbers were. But where have you been? My numbers have been around 17%. Hamilton Place's numbers are 10.4%. Real unemployment. 3 million people missing off the job rolls. As a matter of fact, Hamilton Place, in light of that employment number, came out with a second report beyond their white paper that Andrew just spoke about, and it casted more doubt over the jobs report. So I'll send it out to members tonight. As a matter of fact, I'm going to post it on the blog so everybody can see it. So all is not well out there. The real unemployment rate is not 8.3%. It's over 10%. That's the real unemployment rate. You're not going to hear it spoken about. And so my hat off to Andrew for finally discussing it. But it's a real number. It's undisputed. IBD, Investors Business Daily, has that number up at 17%. Hamilton Place, 10.4%. Somewhere in the middle probably lies the truth. So the actual unemployment rate is still well above 10%. Now let's move on. What stocks are we going to focus on? This week we're going to touch upon HGT, Hugoton Royalty Trust, Texas Instruments, TXN, Dun & Bradstreet, D&B, TZA. That's the Direction Daily Small Cap, Bear 3 shares, Real Networks, RNWK, Metro Bank Corp, METR, Regeneron, REGN, pharmaceutical stock, Seagate Technologies, that's a disk drive maker, STX symbol, RJet, Republic Airways Holdings, Tata Motors, Indian car maker, LCC, that's U.S. Airways, Zimmer Holdings, ZMH, HEK, that's Heckman Corp, Alaska Air, that's of course an airline stock. All of these folks, with the exception of a couple, and I'll break them out individually, are extreme overbought stocks. So as you could see, the broad spectrum of stocks that are overbought are cyclicals, early stage recovery stocks that are doing quite well. So let's begin with Hugoton Royalty Trust. You'll remember last week, if you go back to my video, I touched upon Hugoton, I touched upon TZA, and you'll see that we were buying up HGT back here, and we took 1/3 profits not this previous Friday, the prior Friday, and we took the remaining profits last week, and we made a very, very nice profit on this trade. As a matter of fact, this stock yields so much, and nat gas, they're cutting back on nat gas production I took a couple hundred shares and threw it into my longer term portfolio. So HGT, nice stock, nice trade, but that's closed as a trade now. It is in our long term portfolio. Texas Instruments. We got long of Texas Instruments back here. You can see this great pullback. Very, very nice. Consolidating against its uptrend line. Great doji, not doji formation, bottoming tails here. And this is where we got in. And sure enough, the very next day, popped higher. We took profits on Friday due to this topping tail that we've seen form. The probability that this stock is probably going to head higher. But we did. We had a nice profit in it. We didn't want to let it slip away. If it pulls back, we just may jump back in on Texas Instruments. D&B. D&B is a watch stock. We are looking to short D&B. And pretty much the remaining stocks that I have here are shorts. I'm going to be getting into all of these stocks in much greater detail with members in the week ahead commentary. And members, stay tuned. I am going to be sending out the week ahead commentary earlier than expected due to the fact that you have the Super Bowl and nobody's going to watch my commentary in lieu of the Super Bowl. So you can see D&B is running up into resistance here. Is it time to short? Well, subscribe to the 14-day free trial offer and you'll find out, because prices are going up, folks. They're going to be going up to $40 per month from the current $29.95. So if you want to take advantage of the 14-day free trial, take advantage of it now and get locked in. Prices will not go up on members who subscribe right now at $29.95. Those who subscribe after the website gets changed, it's $40 per month. All right, so D&B is the first watch stock. TZA, I mentioned this last week. We predicted that it would go down further. It went down further. Oh, by the way, Doug Cass is now a follower on Twitter, which is great. Thanks, Doug, for following me on Twitter. It's quite the compliment. Real Networks, RAW. Oh, by the way, Doug Cass is the guy who made the call on CNBC, who finally convinced me to cover my shorts after the financial crisis when he made his generational low call. So thanks, Doug. If you're watching this, I appreciate you finally being the guy that made me cover those short positions. All the charts were screaming, cover them anyway. So Real Networks is a stock that we are watching to get short of. Not quite yet, though. It's still, you have these nice candlesticks here. Volume rose. So not quite yet. We're not going to be jumping in pretty much any of these. Well, maybe one on Monday morning. Maybe one we'll be jumping in on. Metro Bancorp, obviously a bank financial. This is looking very, very good, very, very enticing. Volume rose, but was below the moving average. MACD looking good. I'm seeing reasons to get very, very bearish on this one. And none of these do I predict are going to collapse. It's going to be trade to the downside. And I believe that. You can take a look at my screen of overbought stocks. And you can see there are a ton of them overbought. The stocks that you're looking at right now are those that I think have the best probability for a correction in the short term. None of them do I believe are going to collapse. So the other stocks, I'm going to send out this email to members this evening, of this spreadsheet to members this evening, so they'll have it and see what I'm watching. The other stocks that I don't cover on this spreadsheet here tonight, I'll probably get into later on in the week with members. Let's get back to the charts. Retrogen Pharmaceuticals is a big pharma stock. RSI at 88. Looking really good here. This is one of my top picks to get short of. Yeah, it's looking really good. So stay tuned for REGN. Seagate Technologies, STX, another really good prospect as a short. RSI above 90. Remember these dopey technical analysis books that are out there, they tell you that a stock with an RSI above 70 is overbought and you should look to get short of it. Are you nuts? When a stock gets above 70, you buy it, you put a trailing stop loss order in, and you let the markets take you out. And when you get stopped out of that position, if you set your parameters correctly on your trailing stop loss order, if you get stopped out, the probability is it's time to get short. That's one of my key lessons for my members. RJet, Republic Airways Holdings, again, a transportation stock. U.S. Airways, another transportation stock, overbought. This rally is broad-based, but when I see that many stocks, this many stocks populate my overbought screener, it tells me that it's time to look to get short, folks. And the time is coming very, very soon. And if you take a look at the VIX indicator, it dropped down. I'm going to be going into this, the markets, the VIX, a lot of other charts that I'm not touching upon here with members in the week ahead commentary. So subscribe if you want to take a look at it. Tata Motors. You can see this is all gapped up short covering rally here. But still, nice short candidate. Not quite yet though. We'll keep an eye on it. U.S. Airways looking really good. As a short, not a long, as a short. Topping tails. Good volume still. I watch the volume. If I see volume still rolling in higher, it's not quite time yet. MACD still looking good. So U.S. Airways is a watch and a probability that we're going to get short of this stock. If you see me highlighting these stocks here, this is 10 stocks out of 70 that hit my list of stocks to watch as a short. Zimmer Holdings, and these are my top candidates. Zimmer Holdings, ZMH. This was on last week. I don't know whether I covered it in the week in the blog last week, but I'm covering it this week. RSI above 85, looking really good. Is it time to short it? No, not yet. This is not one of my top candidates to short on Monday. But looking really good. Not quite there yet. And I'm going to go again into all these in great detail with members in the week ahead commentary, which is going to be coming out tomorrow morning. HEK, Heckman. This was a stock that I have a friend. His name is Roger Pinto at Raymond James. He's a financial advisor, a great, great financial advisor out of the Raymond James office in Plainview, New York. I was talking to him last night about HEK, Heckman Corp. He likes it. He asked me to take a look at the charts. I happen to like it as well. As a trade, I don't like the fact that these moving averages are moving downward. I think that we might get another test at that $5 per share level. So I like the stock as a long. If you break down below 5, you have to step back. So your risk to reward is good with this stock. So if you want to get long and put a stop loss order in below the $5 per share level, I'm fine with that. So we'll keep an eye on it. The chart is looking good, but the moving average is sloping down are a concern. Stoke RSI is looking good. MACD is looking good. Money flow is starting to look good. It's trending upward now. On balance volume, look for a pullback on the on balance volume. Hopefully put it at a double bottom here and look for your continuation rally higher. But again, put your stop loss in right below that $5 per share level. Roger, and I'm going to email you this tonight, Raj, and I'll see you next Friday. Give me a call during the week. Alaska Communication Systems Group, looking good. W formation, looking for a breakout higher. I'm going to be going into this with members. As a matter of fact, Eric is one of my members who referred this to me. I like the stock, Eric. Thanks for bringing it to my attention. We like the stock. I'm going to be going into it with further detail on the week ahead commentary. Folks, again, please take advantage of the time remaining for the $29.95 rate. Prices are going up. The site is being totally redone once again. So please take advantage of it. I have to raise prices. My costs are going up. I have new people working for me, and it's imperative that I do that. And it only provides my members with a better experience. So please take advantage of that $29.95 rate. Sign up for the 14-day free trial. Lock it in now. If you have any questions, please shoot me an email. Go Giants. Sorry, my New England friends, but go Giants. And everybody have a great, great trading week. If you have any questions, please shoot me an email, and I'll talk to you soon. Take care. Bye-bye.